Happy Monday, tech enthusiasts, and welcome to the Tech Stocks Daily Podcast. Today we're diving deep into juicy financial feuds and potential goldmine growths that could shake up your portfolio. Kyndryl Holdings is in the hot seat with accusations of securities fraud, yet teases a staggering 5,300% earnings growth, truly the soap opera of stocks. Meanwhile, Manhattan Associates faces a class action lawsuit while prepping for their Q1 earnings release, sure to stir up investor emotions. And Fox Corporation is making waves with value metrics that might just outshine Netflix, perfect for those sniffing out investment opportunities. Buckle up for today's roller coaster of corporate drama and tantalizing financial disclosures. Today we're diving into the roller coaster ride that Kyndryl Holdings Inc. experienced in the newsroom. Now buckle up, because Kyndryl is having quite the moment. What should be a simple tale of stock market movements shifts into a tale of high drama involving falling stocks, accusations of financial mischief, and eager-eyed investors waiting on earnings reports. First up, let's talk about the stock performance. Kyndryl Holdings closed at 28.89 cents in its latest session, marking a small but significant 1.13% dip. Sure, it might not sound as gripping as Tom Cruise on a mission, especially when compared to the S&P 500's more staggering 2.36% fall. But every percent counts in the investing world. Tech stocks on the NASDAQ took a heavier hit, with the index dropping by 2.55%. Over the past month, Kyndryl's shares have dropped about 15.48%, underperforming both its sector and broader index. Investors must be bending ears as they await an upcoming earnings report, where the company is expected to be showing a staggering 5,300% year-over-year growth for expected earnings per share. This kind of growth, it brings all the kids to the stockyard. But wait, just as the scene flips, Pomerantz law firm, one of the big dogs in corporate litigation, is investigating Kyndryl on allegations of securities fraud. That's right, a nail-biting report from short seller Gotham City suggested that Kyndryl manipulated its financial metrics. The dull roar of allegations dropped Kyndryl's stock price like a hot potato, down 5.11% in a trading day freefall, landing at 32.32 cents on March 27, 2025. The focus of Gotham City's claims? Allegedly fudging numbers on adjusted EBITDA and adjusted free cash flow, painting a misleading picture of profitability and liquidity, while the backstage reality involves losses and cash burning. Oh, and these allegations sparked the interest of investors right before a potentially transformative earnings disclosure. For those not bumbling in market glass balls, keeping an eye on changes in analysts' estimates comes as an industry secret sauce, a kind of tech stock tarot reading. The Zacks rank, a knight's role in these battles, uses estimate revisions to determine stock ratings and predict performance trends TikTok-wise. For Kyndryl, its Zacks rank flickers, settling currently at number 3, hold. Presently clinging to a forward PE ratio of 14.06, beating the average industry forward PE, which rests at 15.94. Kyndryl paints itself a more lucrative purchase depending on better growth prospects. Will Kyndryl untangle these financial web subjects and mystify us with rockstar earnings? Will analysts polish off their crystal balls and enchant predictions more pleasing to Wall Street? With Pomerantz investigating, a detective story unfolds amid SEC filings, whispering possible twists and turns over conference calls in the night. Stay tuned as this drama untangles likely post-earnings release and beyond. Hold on to your tech hats, folks, because Manhattan Associates is stealing the spotlight in today's tech headlines. This global powerhouse, known for crafting software to manage supply chains and omni-channel operations, finds itself in the whirlpool of financial prattle, and there are two main reasons for all the buzz. First up on the docket, we've got a new stir in the stock market, with Rapids LLP unveiling a class action lawsuit against Manhattan Associates. The crux of this legal drama revolves around allegations of misleading investors about their growth capabilities. Picture this. Between October 22, 2024 and January 28, 2025, the mighty Manhattan Associates claimed they had a Midas touch for revenue growth, despite the topsy-turvy economic horizon. According to them, their cloud revenue was a magical source that would grow their professional services. Well, let's just say the beans they spilled didn't sprout the way investors had hoped. When Manhattan Associates reported their financial results on January 28, 2025, reality delivered a sucker punch. The company duped expectations by lowering their revenue predictions for 2025, blaming it on a mysterious shift to future periods and an unexpected pinch in customization and partner use. Investors weren't amused, and neither was the stock price, which plunged over 24% the next day. Yikes. This lawsuit offers tear-drenched investors a chance to seek some justice, or at least a slice of the pie back. Now flipping over to our second major plot point, Manhattan Associates is about to drop their Q1 earnings report, and Wall Street analysts have donned their prediction hats. They're forecasting an earnings report of $1.02 per share, a tiny smidge lower than a year ago. Revenue? Analysts predict a 0.9% uptick, penciling it in at $256.91 million. If this isn't corporate drama, I don't know what is. Diving deeper, the analysts offer a smorgasbord of metric predictions. They anticipate a tasty 19.9% jump in revenue cloud subscriptions, up to 93.54 million, which will surely give some relief to those hungry for positive numbers. However, expect a sour note with revenue services declining by 11.2%. Toss in the facts that revenue hardware is on the rise by 4.1% and revenue maintenance slipping by 9.9%, and you've got a heady cocktail of numbers predicting Metro Associates' immediate stock performance could flaunt stability, a hopeful blend compared to the mini-market storm it braved earlier. Despite the earnings excitement, tinged with lawsuit drama and mixed revenue forecasts, the stock is playing it cool and collected. Carrying a Zacks rank number 3, Manhattan Associates seems poised for market equilibrium for the time being. As we edge toward their earnings release, all eyes will be on how reality matches these educated guesses. Whether they're climbing or coasting, Manhattan Associates is clearly in the technosphere's limelight today, with investors and analysts decoding every figure during this thrilling ride. Will they shine like a shooting star, or do a cautious cha-cha through 2025? The coming days will be full of adventurous financial episodes. Stay tuned, tech aficionados. Today, Fox Corporation, trading under the ticker symbol FOX, is stirring up some buzz in the tech world with a couple of significant updates that you'll want to pay attention to. First, Fox Corporation is set to discuss its third quarter fiscal 2025 financial results via a live audio webcast on May 12, 2025. So mark those calendars if you're keen on hearing firsthand how the company has been faring financially. The results will be released bright and early at 8 a.m. ET, so prep those coffee mugs. Why is this a big deal, you ask? Well, financial results are the pulse check for any publicly traded company. They dictate how the company's growth and profitability look to investors, potentially influencing stock prices. Fox Corporation, with its rich lineup of news, sports, and entertainment content under well-established brands like Fox News Media and Fox Sports, is a company that captures attention and anticipation whenever it's time to divulge its earnings. Moreover, if you're a value investor hunting for juicy stock opportunities, there's some tantalizing news here. Financial evaluations have been zeroing in on Fox's performance, pitting it against streaming giant Netflix in the value department. Fox Corporation is sporting not only a solid Zacks rank of number 2, but also looking shiny in a few nifty valuation metrics. It boasts a forward PE ratio of 9.93 compared to Netflix's heftier 39.72, alongside a fruitful PEG ratio of 1.11. In terms of PB ratio, which measures market value versus book value, Fox is sitting comfortably at 1.74 against Netflix's lofty 16.82. These indicate that Fox might be packing a better value punch right now, scoring itself a value grade of B compared to Netflix's F. This means, according to these metrics, Fox might be undervalued, hinting at some lucrative opportunities for stock market savvy folks out there. These are figures worth pondering if you're thinking about where to park your hard-earned cash. So, what do you think? Are you tuning into the Fox webcast, or are you considering adding a slice of Fox stock to your portfolio? I'd love to hear your thoughts on whether you think Fox is the value bet taking the stage over Netflix right now. Are these numbers enough of a nudge to shift your investments, or are you sticking with the high flyers? Drop your comments below and join the conversation. Your views could guide someone else standing at the crossroads of their next investment move. Let's zoom in on Kyndryl Holdings and see where it sits among investment options. Today's avalanche of news has transformed Kyndryl into the focal point of corporate plot twists. Now, if we're talking strategy here, Kyndryl is a solid candidate for a cautious hold. Why hold, you ask? Well, let's unpack the treasure chest of reasons. Firstly, the upcoming earnings report is the talk of the Wall Street town. Analysts are expecting a jaw-dropping 5,300% increase in year-over-year earnings per share. It's like waiting for a unicorn to gallop through the financial jungle, rare and with a sprinkle of magic. The earnings report could be a potential game changer, so it might be savvy to hang tight, keep your eyeballs on the prize, and evaluate whether this supernatural growth performance really kicks in. However, let's not glaze over the drama unfolding side stage. Pomerantz Law Firm's investigation, spurred by Gotham City's allegations of Kyndryl's securities fraud, tosses a rather sizable monkey wrench into the proceedings. Rice of disbelief might be necessary, because if these accusations hold water, the stock could face rough seas. Kyndryl's reportedly dodgy financial metrics highlight that plot twist, with potential legal and financial implications hanging in the balance. Throwing analysis into this dynamic recipe, Kyndryl's current position with a Zacks rank of number 3 hold aligns with keeping a cautious distance until the financial waters calm. The stock's forward PE ratio presents a somewhat golden opportunity given it's below the industry average. However, implications of legal struggles could still cloud those silver linings. So for listeners considering Kyndryl in their portfolios, hold on tight, see how the legal showdowns resolve, and wait for the upcoming earnings release to really whip out those binoculars. It might be exactly the cue you need, either to leap or to lay low. And just a quick reminder, always perform your own research before tinkering with your investments. The tech stock universe is as vibrant as ever, so when in doubt, consult financial advisors before making any bold moves. Safe investing, tech friends. Wow, what a day in the tech market. We saw Kyndryl Holdings become the center of a massive financial drama with allegations of securities fraud popping up, while also promising an astounding 5,300% growth in earnings per share. A true tale of suspense waiting for its next chapter. Meanwhile, Manhattan Associates found themselves entangled in a class action lawsuit after missing revenue expectations, but still hint at promising future growth with their Q1 report around the corner. Over on a brighter note, Fox Corporation might have just stolen the show on the value front, boasting metrics that make it a tantalizing consideration compared to some streaming giants. Each of these companies has shown us just how lively, unpredictable, and occasionally tumultuous the tech market can be. As always, keep your eyes peeled for any twists. If you enjoyed diving into today's tech stock tales, be sure to like, subscribe, and share this video with fellow tech enthusiasts and budding investors. Let's keep this conversation going, and I'll see you all tomorrow with another round of tech news updates.